Hey, good morning, guys. Welcome to another webinar here. This morning, this is my favorite webinar actually. When we talk about Fibonacci, okay. This one's entitled "The Wonderful World of Fibonacci" and the mathematics of growth and decline. And this is really kind of where a lot of my studies in the past kind of came back at me when I started studying the market and studying Fibonacci, because before I got deep into trading, I mean, I had messed around with trading, but just kind of like from a kind of a gambling point of view, kind of just like, oh, what's going up, let me chase it, what's going down, let me sell. I didn't really understand trading the first time that I took the journey, but I had always kind of studied like sacred sciences and cycles of life and just kind of like different esoteric teachings, I guess, if you will. And it's kind of interesting because Fibonacci and the harmonious flow of those mathematical numbers was prevalent, in a lot of things that I was studying: ancient cultures, ancient architecture, nature. And so it really became interesting to me because this is Fibonacci in life. Okay, like this is how everything in life and creation unfolds according to these Fibonacci numbers. Okay, this Fibonacci spiral, we're going to see it in everything, in ancient paintings, in ancient architecture, in nature, even within ourselves. Okay, so one here, even within ourselves. Okay, like our DNA structure, the shape of our ear, the shape of a lot of our body parts is very harmonious in that flow of numbers. Okay, this is so the ancient people knew, and they tuned into that harmonious flow of numbers in architecture, in paintings, and in art. And there was a reason for it, because they understood that if they could harness the harmonious flow of mathematics in nature and mimic it into our own creations, that it would have an unseen energy that would add to things, like, I mean, as far as like when they built ancient structures, they knew that it would have a harmonious energy in there that would help, people when they gathered there would have more, if people were to speak in these buildings that had this ancient blueprint that it was designed by, that the people listening inside the building would be more receptive to what they were saying. Okay, like, so there's a lot of like unseen energies that go along with the Fibonacci ratio. Okay, and it's undeniably everywhere in ancient structures, in us, in creation, everywhere. And so when it shows up in the markets, it really starts to kind of put the pieces of the puzzle together, because when we're studying the markets from our strategy, is that the market is just a psychological pattern that repeats itself over and over and over again. So if the market's a psychological pattern and it's unfolding in Elliott wave formations, whether it's small sets of waves that lead into larger waves that lead into larger waves, it's the same fractal repeating itself. And in reality, it's the same Fibonacci sequence repeating itself over and over again. Because when we play these waves, when we see this impulsive wave and we try to get this retracement point, or when we try to get this retracement point, or here, this whole thing unfolds according to Fibonacci, a blueprint of Fibonacci numbers. Okay, meaning that the price will impulse and then it will retrace to a Fibonacci number, and it will extend in price again, usually to a Fibonacci number. So using this tool is one of the best tools that I found as far as like our entries and our exits to get in and out of the market. So it didn't really surprise me after I started studying it more that what we're seeing in the markets with Fibonacci is just another expression of how things grow or how they decline. Okay, It's just a mathematical formula that I don't even try to understand it anymore, honestly. Like, I mean, if you keep digging into it, you'll just keep going down different rabbit holes of, why these numbers are so mystical and why they keep showing up in ancient structure and in nature. And, I've just come to accept it that they are, it's like sacred geometry. There has to be some sort of creator that has a divine blueprint to how everything in life unfolds. And everything in life seems to unfold to this Fibonacci sequence, okay? Undeniably, all of these way that this spirals out and grows in every single one of these examples, and in every one of these examples here, and even in our own, shape of our own ear and our body and stuff. So there is a harmonic, like a number, like a sequence of numbers that's kind of running in the background of the universe that kind of gives everything a divine order, if you will. And we see it in the markets as well. And it makes sense because as the Elliott wave plays out over and over and over again, this is just a pattern of human emotions, of human emotions. Like, every time that we buy and sell on the chart, it leaves a print. Okay, so when the masses of people come in, and you have that collective consciousness of people chasing the price and getting and losing money and getting back in and then losing money again. And when you have that, it leaves a print on the chart, and that print is measurable with the Fibonacci tool. Okay, like I stopped even questioning why, because the only thing that seems to make sense is that it's a representation of human emotions. Okay, like, that's the only thing that made sense to me. Like, when I started studying this emotional pattern that shows up in the market and how that relates to the Elliott wave, cycle, okay, and how it's just an emotional pattern again and again, and then how that emotional pattern can be measured with Fibonacci, it really makes sense, because there's things going on in life that we don't really understand. There's like unseen energies that we don't understand, like how things grow and how like that mathematical sequence that's unfolding and everything, we don't really understand it. I mean, we could try, but it leads us back to the same place of, there's a greater force at work, there's a greater energy at work that has made all these things that way. So, you could get into the religion about it and, spirituality behind it, but I just kind of accept it for what it is, that everything in life unfolds to this mathematical blueprint, including the moves in the market that we're measuring. Okay, so we want to use that tool. It's one of the most useful tools that I found in trading and in anything else. All right, so we're going to go through some examples here on how Fibonacci keeps showing up and how we're going to use it for our entries and our targets, based on measuring the first impulsive wave. Okay, let's just talk real quick about Ripple. Ripple's a really interesting one. I mean, most of you guys know that it just completely exceeded my target right here yesterday of 3,800. That doesn't mean that I don't think it might not still drop down to my entry right here. I mean, we could get a nice dump and just tag that top of that wave. But what's interesting is that this and every other market seems to be following the same structure. Okay, the same structure. So from where you break out to where you go, you can put a Fibonacci ratio on there, Fibonacci tool. Okay, and we're looking for, after we have an impulse, we're looking for this spot right here, the 61.8 to get in. Okay, now sometimes it's a little bit lower and even down here into this point, but it depends on where you're at in the market cycle. If you have that if you're kind of at the end, like we'll look at Dash in a second, like if you're kind of like at the end of a move, you'll usually find the retracements fall deeper. Okay, if you're at the beginning of the move, beginning of the impulse, you usually find the retracements fall within this general area, anywhere between 38 to 61, depending on how bullish it is. But just using that simple tool of understanding that once an impulsive move happens, we don't chase it. We don't chase it at all. We just wait, let everybody else chase it, let everybody lose money, and let it sell down. And that's where we look to enter, is at this point. Okay. Now, I don't question why. Like I said, I just do the tool over and over and over again on all these markets and look for the entry on those. Okay. And it really keeps showing up time and time again. So we could also use the same tool to measure that first emotional wave and get some targets out of it by going backwards from where it wound up to where it came from, right about there. And that gives us extensions in price. Extensions of price that we might visit from this impulsive move. Now you can see here, Ripple hit them all, basically. Even just about that one. Fell a little bit short. Now, when this emotional move happened, I put this ratio on here, but I did not expect it to go through all of those stages within this first impulsive move. Okay, it exceeded my targets. I thought that we were going to get a run to about 38, our previous price point, and then a drop back down, and then that fifth wave to go higher. Now, what it's showing me is that with the volume and the momentum that's around, that we're kind of blowing right through these Fibonacci extensions on some of these earlier moves, meaning that this thing is probably now going to get another move out of it that will go even higher. And on a higher time frame, that will just paint a whole kind of like a, you know, if we have a 1, 2, 3, 4, and a 5, on a higher time frame, that will just paint a 1 and a 2. Like I was saying before, Ripple has a lot of upside. Okay, it just broke its market cycle and it's already kind of running. Okay, you can see here, already running. This is what I was talking about before, guys. When you see something like this just break out, be aware. You know, be aware, because it's there's a new cycle beginning. Okay. Now, what I think is going to happen here at Ripple is going to be similar to what we saw with Ethereum, where this thing just kind of gears up now and it starts running for this 1.272 and makes a new all-time high. So that's kind of where I think that we're going next. Okay. And again, this is based on Fibonacci numbers. Based on these Fibonacci numbers, but just in a measurement of this first emotional impulsive bubble here. Okay, it's showing us that this is a potential extension in price. Okay, a new high will probably be made right here. Okay, and that's what happened with Ethereum. That's what happened with Ethereum. We can see here. All right. Ethereum. Now on the monthly we don't see it because we've already surpassed it, but Polo crashed when it was not. Hold on, let me read that. Do you know that Polo crashed when it was still going up? That was not just a pullback. Yeah, I didn't really know what happened with Polo yesterday. I was at the beach. Some people were telling me about Polo. I just know that their servers can't handle the traffic. You know, it's just really, their servers just really can't handle the traffic. Now, the price of Ethereum hasn't. I mean, it left here. It definitely crashed through this respect to this top wave. But a lot of this sell-off yesterday, I'm sure, had a lot to do with people chasing Ripple. And I don't think this is going to change the trend for Ethereum at all, especially when you look at it against the dollar. It's kind of really maintained. I mean, we see the same dump off here, but it's really maintaining. Oops, not 8 hour. I don't think it's so much in a downtrend yet. I think it's actually on a retracement with Ethereum. I think that we might get a bounce off of this cloud and have the buyers start stepping in and then continue on. Ethereum did not paint the really nice wave set that we're used to seeing. Okay, it definitely, this wave here did not respect the top of this. So I'm just waiting for it to do a retracement of the whole move now to get an idea of what we got out of that move. All right, because sometimes they paint them and sometimes they don't. But I don't think Ethereum's dying. I don't think it's going to continue down at all. I think it's actually going to bounce in here and continue. So when we look at Ethereum's first target, and with Poloniex, I've been using Poloniex guys for like over 4 years. Their engine does suck. They need to upgrade that. I mean, especially with the amount of trading fees that they're getting on the daily. But I don't think that they're going to get hacked, or I don't think that our funds aren't safe there. I actually withdrew some coin there this morning, and it was quick, really fast, no problem. So it's just one of those things. Oh, sorry, I'm looking against the dollar. That's why I don't have the chart history. Okay. All right, here we go. So here, when things want to create new all-time highs and they want to break out and run again and create a new market cycle, you get an example of this right here with Ethereum. Now, we knew that this was going to be our first target right here. We had talked about that early on. But did we expect it to happen in a week and a half? No, we didn't. Okay, we didn't expect it to happen that fast. But you can see here, that is a very important numbers, these Fibonacci numbers, how we can measure this first impulsive wave right here. I'll take the Fibonacci off there and do it again for you guys. Where we take the tool and we go from the top right back down to the bottom to where it started from. And that gives us extensions in price. Now you would use this same tool if you were going to, like let's say we were going to trade this and look for a place to short it. Which wouldn't be, I mean, I'm not trying to short any of these markets right now because they're on bullish runs. But on the way up, these are all potential levels where the bears might step in, where the sellers might step in. 61, 78, the 88. But once we clear all those retracement points back up, then it gives us extensions in price. Okay, because once we clear this all-time high that we had previously and we start going higher, and we make a new all-time high, and those levels, those targets that would be of interest are going to be Fibonacci extensions off of this first move. Okay, and I know it sounds weird because this move happened, well over a year before this move here, but it really doesn't matter. Like, price has memory, and the psychology, I mean, even though it's different traders, different money, this move here left a print on the chart that can be measured. And the extensions in price are already mapped out from this previous move. So that's what we see here. We see that Ethereum came up in its first target right there was the 1.272. Okay, after it went through there, it tried to get here to this one, and it fell just a little bit short. Actually, no, just a little bit short of that one right there. And so now once this thing regains its strength here, I mean, it's getting to the point now where it's been tried to be dumped down several times, and it's effective for a minute, but then it pops back up. We're getting to a point where our daily is oversold. Our higher time frames are ready to reset. Anywhere from our daily reset to our 12-hour here oversold, to our 6-hour. I mean, these things are looking for, the 6-hour actually did reset here. These things are looking for a place to turn around once everybody stops selling them down. And that's what happens in the market is that, this thing, sure, it had a huge run up here. And then while it's in this zone, everybody that's buying it thinks it's going to continue, wants it to continue. But if there's not enough momentum and impulse there to continue pushing it and other things move, then people dump out of it and they want to go chase something else. I mean, I even do it because I have a limited amount, not a limited amount, but I have a strict amount that I want to trade with on Poloniex, for example. So if I see a coin that I'm already up in profit on and it's not moving anywhere, I'll sell it a lot of the time. If I'm already up in profit and it's not really going anywhere, I'll take my profit, I'll get rid of that coin, and I'll put my coin into another coin that looks like it's moving that day. Because if I can get out of this, and because I'm in profit from down here, if I can get out of this here before it goes down further, I'm going to do it, and I'm going to put my coin into another coin that I could get 40% off of today or within the next 2 days. So it's just the money moving around. I really don't think that this thing is going to, fall through the clouds and go back down here. Like, there's a new market cycle that's been initiated, but we're at a point here where it's like $50 a coin and it used to be 12. So it's got to fight. It's got to get these, it's got to get the sellers to wear out and the buyers to step back in when that happens. And a lot of times we do see something like that where it dumps down below our support level and springs back up. So I don't think Ethereum is dead or anything like that. I think it's just the circumstance. Ripple went from about $500 million market cap to $2 billion in this weekend, so which is absolutely ridiculous. We had expected it to have a new market cycle and to continue up, but $2 billion coming in a weekend just blows my mind. I mean, it shows you the potential we have here for cryptocurrency. Okay, so we want to use our Fibonacci tool for our targets of interest and also for our retracement points of where we want to get in. All right, let's look at Dash now real quick. Okay. Now Dash, you guys that know, watched my video the other day, I was trying to get in here on this 61% line, thinking it'd be a good place for it to turn around. And luckily I didn't buy there, and I bought it at 550. And I got, blown right through, and it went all the way down here to 88. But I didn't sell the stuff that I bought at 550. I didn't sell it because I knew that it's going to turn around. I just misjudged my entry. And again, this thing wicked all the way down here because people just, it gets to a point where people are just going to panic and they're just going to dump out and not understand, the potential of reversal or anything like that. So that's where, I should have been aware. Well, I mean, I had my buys already set there before I went to the beach, and then Ripple surpassed my target and all this more money came in. So then other coins got dumped down. So that's, how I wasn't ready for a move like that. But you can see what happened. I mean, this thing went right, our whole move. Now I'm calculating our move from this blue line. Okay, this blue line right here. Because that blue line is our breakout line from previous. Everything before this was just previous price action. When we had this breakout right here, and we got on the retracement here, like about 3 weeks ago or so, we knew that it was going to run up, and we basically mapped out all these targets. But after that move expired, there's a downside to come. Now, we didn't play this downside. There was definitely short opportunity here, but there's a bullish sentiment in cryptocurrency, so I'm not even trying to look at short plays. Honestly, I'm looking for more plays to buy low and sell high, because with Dash, who knows where it was going to turn it out here. I mean, I really feel like Dash will probably bounce here and get another wave out of it. I mean, we're very strong on some higher time frames, so by the time that this monthly gets pinned up here, now it could just dump down here and turn around, but I just don't see the likelihood of that. I really don't. I really see that it's going to sell down here like it sold down sharply and get a lot of people out of it and a lot of new buyers to step in. And so that's what we see here. Oh, my Fibonacci's not in the right spot there. Sorry, guys. There. So from our entire move here where we broke out, we can measure the whole move. Here, I'll just go through and do it again here for you guys. So, okay, just to show you guys, I'm calculating from this breakout line. Basically, this blue line right here is where the price broke above that line and left behind all the previous price action. And then we had this volume step in right here to push this into a new expansion of price. So this is where I'm calculating my Fibonacci from. I'm not you could take it from the low of the market, but it's going to give you a different reading. But this is where I see that the money stepped in and changed things. It changed. This is where the monthly opened for Dash outside of the previous price action. So that's where I'm taking my Fibonacci reading from. Okay. Which is more accurate to me because this is where this money stepped in to do this move. Sure, it probably rallied up here, but this is where it decided, hey, bang. This is where we see more volume come in. This is where we got our first initial move that we got our extensions of price off of. So first, let's just cover the first move and then go from there. Now, after we had this move here, basically, right from this blue line, okay, again, you measure the move. You look for entry based on the Fibonacci retracement points of that move. Now, this one dropped down to the 78.6 right here, which gave a very good buying opportunity. I was more so looking here. Like, this is where most of us got in at the 61.8, right in this area, because we expected, according to our Elliott Wave count, another move to come. Okay, and this move gave us the first impulse that showed us that, hey, there's a bigger move unfolding here. Okay, and that move can be measured. Same way, right back down to the line. And that gave us our extensions in price. And all those extensions in price, all these Fibonacci numbers served as very important points going forward. Right here, right here, right there. Not so much this one. Definitely that one. And we missed the top one. We just missed the top one right here by just a little bit. It didn't extend in price all the way that way. But you can see how these Fibonacci levels serve as potential price points of interest. I mean, they can be targets or they could become, they are targets, but what happens is they're also resistant points and points that once they get cleared will turn into support. Okay, here we rallied right through the 1.272 and we hit the next one. But then we consolidated in this area and we actually found support right here on top of this 1.272. Okay, and then once we could break the 1.61, we rallied right up to the next one, to the 2.272. And then it took a minute to chop around in here until we could finally, we didn't actually tag this line, but you could tell it sold down there to kind of clarify that these previous tops right here were now support. Okay, and then after it cleared there and went through, target this next Fibonacci extension right here. And then the next one popped through, but it couldn't expand in price all the way up to there. And then we get a retracement of the whole move. Okay, so how Fibonacci relates to the price is very important. It's really important, guys. It's going to give us our targets. It's going to give us our entries. All right, let me put my line back here again. And now we want to measure the whole move. Okay, let me just get rid of my stochastic. We want to measure the whole move. Now, that's another thing I want to point out, guys. Like I did buy here. I had a buy there at 550 yesterday, and like I said, it dumped down to 345. Now, if I would have seen that dumping down that low, you have two decisions then. Do you panic with the rest of the herd, or do you stick with your idea that you say, okay, I feel like this is going to turn around here. I just misjudged my entry. Just pointing out that just because I got in here at 550-ish, okay, basically looking for a bounce on this area of support before. Just because I got in there at 550-ish doesn't mean that because the price goes lower, I have to sell and accept the loss. Okay, that's a big thing that you guys need to realize here, and that's why cryptocurrency is more profitable than Forex, because in Forex, if you misjudge your entry like that, and it comes down that far, you're liquidated. Everything that you have in your trading account, unless you had a stop, is liquidated because you're on leverage. But these are spot orders on cryptocurrency coins. Like, this isn't a leverage trade. This is, to actually own these Dash coins. So just because I bought here at 550, I don't need to accept the loss on that trade unless I sell at a loss. I mean, simple as that. Like, if I sell down here, then I fall prey to all the panic and the fear and everything else, and I take that loss. But if I just am patient and say, okay, I really feel like this thing is going to turn around, it just panicked down further than I thought, let me just be patient and wait for it to turn around. And so that's what I did. And now it's basically almost right about at my entry, and then I can decide, all right, do I want to get out at break even, or do I really feel like this thing does have the potential to turn around? Okay. And actually, I do think that this does have the potential to, at least rally past where I could get some profit out of this. All right. But take note of what happened here. First, when the price fell, it fell down and it basically congregated right here on the 61.8. And it really, seemed like a pretty good turnaround spot. But then when Ripple started pumping, it snapped. Ripple started pumping more and people dump out of one coin to chase something else because they'll see more of an opportunity to chase the pump. And and like I said, you can chase the pump if you know what you're doing, if you're going to like put your money in and get it back out within a couple hours or within that impulsive move. But anybody that bought Ripple at, 6,000-7,000 expecting 10,000, 20,000 to come, they got burned on the pump. So this thing is going to respect Fibonacci ratios though. Okay. We basically sold right through the 61.8% here. And we sold all the way down to the 88% line and tagged it. Now, if we actually even look at the open and close price, though. Oh, sorry, not that one, guys. I never used the area one. Here. If we look in the open and close price, it actually turned around before it even hit the 78.6. Okay, so all of that sell down in this entire area, all of this was just panic. Was just excessive selling and panic to get out. And when you look at it, this would have been a really good place to enter. Okay. Now, if I would have seen here this line snapping as hard as I saw it snapping, I mean as hard as it snapped right here, then maybe I would have pulled my 550 buys. But they were already in the books. I set my buys on Dash and went to the beach. Came back and saw that it dumped all the way down here. So as I was saying, you don't have to take that loss unless you accept that loss. So now as this thing starts to creep back up, decide, okay, do I want to get out of this trade at break even? Do I think it has potential to continue on? But I do feel like it has that larger potential on a monthly level, or at least to get a bounce out of this thing up to the 50% line, which would put me in profit. So I'm just going to hold that position. Even though I misjudged my entry, I don't have to take a loss on it unless I, press the button and say sell and accept that loss. So that's a big thing, with cryptocurrency, guys, is that if you feel like you got into a trade and you feel like there's still potential, but you just misjudge your entry, just wait. Just be a little patient. Like, let the move play itself out. Because if you follow the rest of the herd into the fear, then you're taking a loss when you don't need to, basically. And it's the same way on the way up. Okay, but we want to use our Fibonacci tool to plot out our entries, to plot out our exits and our targets, and consistently use that strategy with the idea in mind that there's a bigger emotional picture playing out. Like, I think the Dash just did a large 1 and a 2 move, except it did not hold the 50% retracement. It basically, panic dumped all the way down to the 88. But when we look at the open and close price, it looks like it just went a little bit below the 61, honestly. When we look at we're looking at the 6 hour now, open and close price of the 6 hour, didn't even tag that. Okay, let's check out our daily. Again, it already seems like it's turning around in here before it even got to the 78.6. So using, keeping in mind the line chart and the candles and, the expansions in price, you want to buy these wicks. I mean, if I hadn't already bought here at 550, when I got home and saw that this thing was on the 88, I would have bought again. Like I said, I only have a certain amount of trading capital that I want to trade with the Poloniex. Just, that's another thing I want to point out to you guys. Like, I have used Poloniex for years, and I don't think there's any problem with them. They're just slow and have, horrible trade engine, especially for the amount of money they make every day. But I don't think that our coins are unsafe there. But I also wouldn't exceed my usual trading capital to chase these markets right now, because if you have more than a certain amount of money on the exchange, then you start to be a little bit of a worry, because, to keep like, 10 to 15 coins there, depending on what your trading capital is kind of still a lot. because if they go offline or you can't get to your coins or something happens, it's a lot of money, you know. So as you make money there, pull it off, you know, pull it off. I mean, just try to keep a limited amount on the exchange, I guess is what I'm trying to say, because you don't want to have all your eggs in one basket, and you don't want to have all your coins in one trade either. So, but using the Fibonacci, you could have scored a really, really good entry here on Dash yesterday, down here at the 88. Now, mind you, the 88%, you have to add that in, guys. And I'm going to show you these inputs here that I have. All right. The default inputs, gosh, it's been a while. I forget what they even are. But I added in the 88.3. That is not one that's standard at all, the 0.883. That's just another string in the Fibonacci ratio, but they don't offer it here. But I've always noticed that 88 is like, it's part of the harmonics when we start talking about harmonics, and it's also that level between 1 and 78.6 that it seems to get visited a lot, that 88.3. So definitely add that one in, and then check your extensions. The 1.272, 2.272, 1.618, and the, let's see, these 2.618, 3.618. These, you know, these are pretty high extensions in price. There's a lot of other extensions in price, but actually we might have to start checking some of these as we get more volume and momentum. I'll have to look into that and talk to you guys more about that in a couple days. But I usually just use these ones. I don't find much interest in the 1.41, the 2.41. The 0.41s don't really have as much relevance to me. It seems like the ones that get visited the most are the 0.786, 0.61, and so it's whether it's the 0.618 or the 1.618 or the 0.786. Sometimes I do the 1.786 checked, but the 2.272, 1.272, these are very, very common numbers that get visited. Okay, so you want to have those ones checked and put in your 0.883. And then, you know, I always get rid of this background. This background is just too much. All right. So this is a really good entry point here on everybody else's panic, basically. Like, you know, our usual place that we look to enter would be, you know, the common traders, you know, Fibonacci extension or retracement would be the 786. But when you put the 88.3 in there, it really gives you the extra little line that you can kind of look for some overshoot, you know, over panic selling or, you know, extensions in buying. And we see that one get visited a lot, actually. I'm surprised they don't have it as a standard, but especially in cryptocurrency, I've noticed. And we'll talk about this harmonic later, but I just want to show you here. In our first bubble, oops, we gotta get some more chart history on it, guys. This isn't even our first bubble for Bitcoin, but this past bubble here. Okay, and Ethereum did it too, where they sell down past that 786 to the 88.3. Right to there. Okay, right in here. 786 is like the bulk here, but it came down a couple times. And just about tagged our 88.3. Okay, just about in this area. Now, I don't even look at this sell-off right here because that's just panic. I mean, when we look at the actual open and close, again, these things basically didn't even come down in this area. And here also, it didn't hardly even came in this area. So using that 88.3 for an entry point based on, you know, trying to get everybody else's panic and where the price will exceed the usual retracement is kind of the line that you want to play, the 88.3. Or just right in that general area, because it's kind of like the overshoot of the 786, and it's not going to last long usually. You know, anything in that area would be good. And what it is that people don't understand, and they sell down. They, you know, they'll panic further than they need to, and what will usually happen is it will just tag that next line, and then the open and close won't even be near it. Also here with Ethereum. We got a just about 88.3, I think, out of it as well. Let's get rid of this one. So yeah, we can use these Fibonacci's for extensions and for retracements. It's one of my favorite tools. I mean, it definitely is harmonious with the way the market's going to flow. Okay, this one didn't tag it quite, but you can see here if you would have played that same, looking for the overshoot of the 786, you could have scored something right about in here. Right about in here. But that's the common one, okay? Is that the 786 is kind of like that entire, retracement. I mean, this example is not the best because this example is good to show you the emotions, but this is 100% retracement here, actually a little bit lower. This would kind of more so look like Ripple's chart, where it did a market cycle and then went even lower than where it started, and Stellar, actually both of them did, same fractal. But it's the same story, like it comes out and starts another cycle. Now what we're usually going to see is things that are going to do a market cycle and then hold a 78% retracement. This is more common to have a retracement of a move in this zone. Okay, first, the 786. If it's going to be really bullish, it's going to be around here in the 61.8. And 61.8 will be more so on like your earlier impulsive moves, like when the cycle is at its beginning, when it's still at the most bullish. And when it's over and the cycle's over, it has to start a new one, we usually see things going all the way down that low. So like Dash, like this is a big market cycle that ended on a 3-day. Now Dash, it just finished what could be its first wave in a larger cycle. Okay, it could have just finished a 1 and a 2. Because if cryptocurrency is going to, look, all right, if Dash is this strong on the monthly, okay, where it looks like now we could go all this month and maybe even next month, okay, before this thing really starts to want to turn around. And we start getting oscillations on like the weekly. Okay, if this weekly wants to turn around like midway, start to turn around in here, about the time that our 3-day gets down here a little bit more and turns around, then we could get another wave out of Dash. Like the higher time frame strengths are there. They really are. So, but this entire move right here, this one, if this is going to be another move to come, then this entire cycle of the first 1 and 2 is done. It's done. I was expecting it to turn around somewhere in here, right in here, but it went below. Okay, the panic sold it below, but we can see that the price didn't really last there for too long. Okay, below that, it didn't really last for too long. So this is kind of the place where we would be looking for a possible another continuation. So that's why we always want to, we use these Fibonacci retracement points to try to find entry on another possible continuation move, whether it is a 5-minute or something larger that played out like this. Okay, now on Dash, this is a larger move. Okay, this is a larger whole market cycle to happen, but it has the potential to continue into another leg and then give us 1, 2, 3, 4, 5, and then a huge sell-off after all that monthly strength has expired. Now how it turns around in here and basically starts to go through these levels on the way back, meaning that now we look at it like this, where Dash fell off from here to here, and now it's got to start fighting its way back up. Okay, once it gets here, it'll be about 38% back up. Here it'll be about 50% back up, 61.8% back up, 78.6% back up. So as we go back up here, these are going to be potential points that the sellers are going to step in. okay, because they're playing the retracements just the same way, but on the way down, okay, like here on Bitcoin. Let me just get rid of all this stuff here. Okay. It's kind of the same way that you would look at this. Okay. You have a big sell-off. We're measuring the impulse, whether it's up or whether it's down. So this is an impulsive move down. So we just measured it with the Fibonacci tool. And it's telling us on the way back up, these are going to be targets right here. And this is right here one of the last short plays that I took on Bitcoin, because to me, with my wave count, it really looked like it was going to sell down here for an ABC retracement of the larger picture. Okay, I was expecting something like this from Bitcoin to sell down. And right here is where we got that China news. But it happened to get it right here at the 78.6. So the fundamentals and the technicals kind of collided that day, because there was already a real good reason to sell right here, because, you know, this is where, if you think the price is going to go down after it rallies back up, that's a really good place to sell, the 786. Just like if you see an impulsive move happen in the market and you want to enter, you're looking to enter on the 786 or the, you know, Fibonacci retracement of that move. So if we had an impulsive move up, we would also put a Fibonacci retracement on it and say, hey, this move went from here to here. Where do I want to get in? Where do I want to get in? So same way, this move went down from here to here and it's coming back up. Where do I want to sell it? Where do I want, if the market's going to continue down, where do I want to sell it? That's where you would want to sell it, 786. And this is where the Elliott Wave theory works until it doesn't work anymore. Okay, like when we were talking about the other day, when you get defied that retracement, that's kind of when you know, okay, then this thing is going to continue on. All right, right here, this is the retracement that we were looking for. Whoops. This is the retracement that we were looking for, and we were denied that retracement right here at that point. It did not fall down and give us this leg. It bounced off the daily cloud and continued on. So that's your indication. You know, if you are expecting a corrective wave and you don't get that third leg out of it, and it continues on past that Fibonacci, then you know it's going to continue. And all that really does is it starts to set up another pattern for people to look at, which is the cup and handle. Okay, right there. So all these things are kind of flowing in a way where one pattern is leading into another, one Fibonacci retracement is leading into another move. Once you study the market enough, you'll start to pick things out that and like you'll start to see the puzzle pieces. What the heck? Sorry guys. You'll start to see the puzzle pieces coming together before they even come together. Okay? Meaning that, for instance, right here, where the price fell off before, all the way down to here. Okay? Now as we go back up, we're going to hit potential points here of resistance. Okay? First we had the rally up here on this 38%. We broke it. Now we're breaking the 61%, and we're going to go up here. Okay, most likely this thing is going to go now to right here. Right about there. Okay, this thing is most likely going to come up and tag this 88% line right here. About 12.15, 12.20. And then I really feel like it's going to sell down again. Okay? I really feel like it's going to sell down again after we hit this line. Because now what we're doing is we have a couple areas of confluence here. Like as we climb back up now, we're going to hit the 88% right as we start to run into this downward sloping, you know, lower high, we could very well make a lower high right here. And that's actually the end of a harmonic pattern. Okay, we'll talk about harmonics aren't that important because they're just another way to view Fibonacci ratios. But this right here is a very bearish pattern. Okay, that would show that there's going to be a sell-off coming at this D point. Now, I had mentioned this in my last video that this very well could get up to about here and then dump down again. That's when we have to see how we get past this resistive point. Okay, on the way back up, we have to clear this. And different traders are going to look at it different ways. I'm putting the pieces of the puzzle together, knowing that this is painting a harmonic picture here. Also knowing too, let's look at this on a little bit of a smaller time frame, that we have other things that are, patterns leading into patterns. Okay. Now, we had talked briefly about the flags and pennants, but this basically right here is a pennant. Okay, the market made a pennant right here. All right, and when it breaks the pennant, it usually runs the length of the pole of the pennant. So if we get a breakout here that runs the length of this pole, bang, where does it lead us to? That line, that downward trend line between here, it's actually right about there. Okay, that downward trend line here, lower high, well high, lower high. I'm skipping the SEC pin bar here because that's just that's just like a not even really relevant. That was just a huge pump and a dump manipulative day. But this is true here. We have a high, lower high, lower high. We can draw a line between these 3 points and extend it into the future, and it leads us right here to the top of this pole of this impulsive run and an 88.3 mark, which is also the harmonic bearish pattern. So there's a lot of things telling me here that by using the Fibonacci here and how all these things come together, that we're probably going to run into some resistance here, and we might dump down again once we hit 1215, 1220. Are we going to dump down under 1,000 again? We'd have to see where we are on some higher time frame strengths, but it would seem likely to at least hit that and dump back down to this cloud. Okay, so I could see us really very well, going to about 1220, then dumping all the way back down to the cloud, which is basically, the 61% here, this previous high right here, or this point right here. So it would seem about logical for us to run to about 1220 and then dump to about 1120, 1100, and then really see how we want to battle out that, around this cloud. If that happens and flows in this pattern, then we have a chance to pull out of it. If we are going to, if we pull out of it, then we could do something like this. Here, maybe even sell back down to here, and then gain our strength up to break through that on a third wave up and actually start to get an impulsive move back up out of this. Right now, we're still in recovery mode, okay, with Bitcoin. Until we break this line, we are still in recovery mode. Okay, so that's why I haven't really given too many trades out for Bitcoin lately, because it could questionably just dump at any minute. It's still recovering from this large impulsive move down. Sure, we have a nice leg up that we're forming right here, but once it reaches here, we got to be very cautious. So once it reaches here, if it starts to fail, then I'll put a signal out to sell or protect your dollar value at that point. I mean, honestly, myself, I'm actually cashing out some Bitcoin this week to buy a new vehicle, and I'm gonna wait just another day or so until local Bitcoins wants to give me as close as possible to 1220, 1225, and because I know that probably after that we're gonna be in the 1100s again for a nice little test. I don't really see the possibility of us blowing right through this line and continuing on. I mean, it could happen, but we have higher time frame strengths that really need to oscillate. I mean, we got the oscillation here in our 3-day, which is good. This is good. But this can also, tilt while it's down here and still weak. the main thing I want to see us get a good oscillation on is, okay, we're starting here in our weekly. That looks good. But our monthly, I want to see our monthly get strong again. Okay, I want we're still up here, but I want to see us start to turn back up and stay up here looking strong. Okay, these oscillations need to happen to show me that we've left behind the bearish sentiment and the recovery, and we're actually going to push to new highs now. Right now we're still in that, trying to recover, trying to gain that, that optimistic feeling in the market again. But I hadn't checked this until this morning, and now yesterday with the new week starting, this looks positive. This does. The fact that we got this pointing up here, it does look positive. So that could be the kind of thing that leads us to the move that I just discussed, where we get a nice push up here, and then we got to retrace. Then we have to breathe, kind of gather our strength here, and then continue on before we push that line. Okay, so but we want to be aware of these points. Okay, and when we have times where our Fibonacci numbers line up with our support and our resistance lines, or like a cloud, it's very much confluent. Okay, for us to watch that point. To really watch that point. So now that we have confluence here, of the length of the pole, the Fibonacci 88.3, and this downward sloping line, I have three layers of confluence telling me that watch the price when we get to about 12.15, 12.20, because that's where our major resistance is coming. Sure, we cleared the 6-hour cloud, but notice how we just kind of like went through it. We sold down a little bit to it, not so much there, and now we're recovering. We might actually now sell down to it here, because look at our exponential moving average is not even above the cloud yet. That blue line, this is like our exponential moving average of price. So it's got to catch up to the current market price. So we could do a little consolidation here and then push to there and then come back down. But I'm really watching this point right here for that confluence. The fact that it's the length of the pole, the 88.3, the downward sloping resistance line. I'm going to be very cautious around that area. So that's how you want to use the Fibonacci, to give it, to give you confluence with other factors. Okay, let's look here at XEM, how using that same strategy, but on the buying side, it led to a good trade on XEM. Come on, load it up. Let's go. There we go. Okay. Now, with XEM, this is a new trend here, sorry. With XEM, we had basically support trend that we're riding on here. Between these points right here, it led us to, in the future, to extend that line. Okay. Basically, oops. Okay. Right here. So this thing, it found support here, which is actually most likely a Fibonacci point from this first move. Boom, look at that, 61.8. So from this first move, it found support at the 61.8, and then it basically clarified, this is trend, 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 and then it went off. Okay. Sorry guys, for some reason my internet's just kind of cutting in and out here, but I'm not losing you guys. So after we held that 61% retracement here, we rallied up again. Okay, after we clarified that it was kind of trending on this line. Now, I break down each move, each wave that the price is going to make. Okay, we see here from this impulsive move, we had a 61.8% retracement. Now we can measure the next impulsive move from where that basically held here and started up again to here, right? Oh, come on, right there. Okay, now look where this bounced. Okay, look where this bounced. We have a couple of confluent factors here. We have this was a good place to enter here. Okay, now I missed that entry and I was trying to tell you guys like 1200 or so. Actually, when it was getting about here, 12, actually it's about here, 1250 or so after I saw it hold this bounce. Now this is where you would use Fibonacci to give you some sort of confluence to take a trade. Okay, so we see we had an impulsive move here that held a good retracement and started a trend. Okay, so as this price here was falling back down, you have two factors here. Well, three, actually. It fell right here into the support cloud, okay, at the 50% line and at this rising support line. That's a good indication that right here, now that's, again, three layers of confluence to take that trade and to buy right there. The three layers of confluence would be that it's going to hit the rising trend, that it's going to bounce off the 50% Fibonacci, and it's going to most likely try to find support in this cloud. Okay, right in here. Find support in this cloud area. Right in here. Okay, so we're going to use that Fibonacci tool to tell us a lot, man. To tell us a lot. You know, I get a lot of my entries and my targets from using the Fibonacci tool. It's one of the most useful tools, especially when you use Fibonacci with stochastic RSI. It gives you another layer of confluence. Okay, look where that turned around. Now I love the 6 hour. The 6 hour is one of the chart because it's kind of like the middle of the road. You know, like I'll check all time frames and kind of like roll through and kind of check like higher time frames, strength, you know, monthly strength, weekly strength, 3-day strength, and kind of give me an idea of where we're at in the market cycle and how much energy we may have to make a move. But when I'm looking for my entries on certain time frames, I'll use the stochastic RSI as well for another layer of confluence. Like here, if I see this entire move now that went up could fall to the 50% retracement, which would also hit that line, which would also hit the cloud at the time that the 6 hour stochastic RSI is crossing over right here, or at least it's on the floor right here telling me that there's a very good chance that it's going to cross over soon, right here, then that's another layer right here when that thing was right in that mode, basically right here. When this green candle came, we got the cross on the 6 hour. So that's a couple of little factors there. You know, it's actually 4 factors now that's telling us that, hey, this is a good place to possibly get in this trade. We got the rising support. We got the Fibonacci retracement level that's held. We got right here the respect of the cloud, and we got the crossover on the 6 hour stochastic RSI. That is about as good as it gets right there, guys, for confluence to say, hey, there's a pretty good chance this thing's going to bounce right here. There's a pretty good chance that I should enter the trade right here. And then when you look at our wave count as well, okay, our wave count here, we had a 1, a 2, nice 3, 4, came down to here. Now we're getting a 5 out of this, okay? And what I've noticed lately is that our 5th wave kind of turns into a monster all in itself with all this like when we're playing Forex or we're playing stocks or something like that, we could usually say, okay, we had a nice long 3rd wave. Our 5th wave that we get may be about equal to the 1st, and then we're going to get that whole, you know, Elliott Wave retracement going on of the whole move. But what I'm noticing here in cryptocurrency is that it seems like after our 4th wave holds that retracement, that 5th leg becomes a wave all in itself, to where we have to look at our 1, 2, 3, 4 as the ramp. Like, I would not be surprised now if this thing gets on its own tear, and, you know, maybe it has to do it from here. It just starts going and does its own, you know, boom, impulse. And that 5th leg gets more of a profound impulsive Elliott wave out of it. That's what happened with Decred. That's what I'm noticing is happening on a couple coins. It's kind of like what happened with Ripple a little bit. Like, that leg just turns into a monster on itself. And I think that we're seeing that more because we're trading things that have a limited supply. And even though that supply, like something like any XEM here, there's a lot of coins, but it's not an infinite amount, meaning that the more money that comes into this and the more the market cap that this thing gets, the price is going to go up pretty rapidly. And we're seeing these market caps now come in pretty fast. So if this thing breaks out here, it could very well get its own leg that shoots it right to the Fibonacci extension of the previous move, okay, which is what I have mapped out right here. Okay, this is the previous high, so let's just get rid of that for a second. All right, this is the Fibonacci extension right here. So now that this thing on the 3-day, I mean, you can see it gearing up here now, guys. This is what happens with the price. It's working its way up in Elliott Waves. Okay, it's working its way up in Elliott Waves, and the market is impulsing and retracing due to the same Fibonacci ratio and formula throughout all of creation. The market is impulsing and retracing, impulsing and retraces. But until you get to a point where it clears a lot of its resistance, and now it just starts a whole new push. Okay, like you can see here with XEM, this thing had to work its way through this 3-day cloud, and now it did. All right, it did, and now it looks like it even launched off of this cloud right about here. Bang. Now we got a 3-day crossover here that's coming right here. Seems like the 3 days crossing over. Our week is very strong, pinned up here. Now, if you look at Dash, when Dash did its whole run, it stayed pinned on the weekly for like 3 weeks. Okay? But then we look at the month. Look how much room this has to grow. All right? This thing has a lot of potential upside just based on this. Just by looking at a simple picture and saying, okay, we have a market cycle that played out, and it took 1, 2, 3, 4, 5, 6, 7 months of downtrend. And then 1, 2, we're on our 3rd month now of breaking out of that market cycle. And look, our stochastic RSI and our monthly is growing strong again. So when things create new market cycles, it goes through that process. It goes through the whole process, the disbelief, and then the market cycle, and then it bleeds out, and then it goes through the whole disbelief and creates a bigger market cycle. Especially in cryptocurrency, these market cycles get bigger because more money comes in and the supply is limited. That's why we see, Bitcoin, just to give you a reference here on, like, let's look at Bitstamp. On a monthly level, we see bubbles that lead into bubbles that lead into bubbles. Okay, back here there was that previous bubble on Mt. Gox when Bitcoin went from there's a couple. Bitcoin was 11 cents, and then when it got over $1, it was a huge thing, and then when it got over $10, it was a huge thing. This bubble right here is only from $12 to 250, I think 260, $12 to 260, and then retraced all the way down to the 78.6, and then broke the cycle and made a new bubble, retraced all the way down to the 78.6, broke the cycle, and we're making a new bubble. So it just repeats itself. These fractals just keep getting bigger and bigger and bigger, and it's really playing out like this, but getting bigger and bigger and bigger as we go because of the design of cryptocurrency. Like by default and by design, cryptocurrency is set up to pump. It's a brilliant creation. I mean, for the financial markets, if you understand it, there's no reason to trade anything else when there's a lot of money around to be trading it. So when we look at stuff like this, we got one bubble, it creates another bubble, creates another bubble, and it just continues in time. So now when we look at XEM, well, XEM had this bubble. Okay, I had this bubble right in here. And then sold down for 7-8 months, and now the monthly's getting strong again. So this thing could very well create a nice bubble and get a leg all the way up to here in the next couple months. I mean, it really could go up to like 6,000. I mean, honestly, it could get all the way up to these extensions if it really wants to, if the volume and the momentum is there. But the point I'm trying to make is that these things, once they break their market cycle, they're reaching for their extensions in price, the Fibonacci extensions. Those are their targets. That's what they're aiming to get to. How far that gets pushed here is going to depend on how much market cap and volume and momentum is around. And with all this market cap momentum that's around, I mean, Ripple went from $500,000 to $2 billion in a weekend. That just blows my mind. So all that money now is still coming. Like if we check the cryptocurrency market caps, Bitcoin's at like 17 billion, Ethereum's at like 4.7 billion, and now all of a sudden Ripple has 2 billion. So that's new money, guys. Like that's not market cap that was taken away from Bitcoin or Ethereum to push that price. That's new money that came in. So now there's new money coming in, new market cycles, new market participants. And look at this. This is a beautiful example. Like this thing is now breaking this market cycle on a monthly level and is most likely going to try to take out this 1.272, the 3,500 mark. Okay, especially the way that it's gearing up now on these lower time frames like the daily, 3-day. Now when we look at this, we just looked at our whole little ramp area in here, and we saw 1, 2, 3, 4. Now this fifth leg up could be the spring that goes all the way up now to this 1.272. Okay, it really could. And if that's what's going to happen, then on like the 6-hour level, on the 12-hour level, we're going to see that same formula play itself out. Okay, where we have a 1, 2, 3, 4, and now this 5. For it to get all the way up here to that 3,500 mark, it's going to turn into its own impulse. 1, 2, 3, 4, 5. And we're going to see the impulsive legs of this fifth leg more defined to the point where it might stretch so high in price that we start to scroll this down. And we have to actually scroll that down, and that turns into some flat line price action that's left behind in the past. I mean, look at XRP, guys. Look at XRP, the way that we have to look at the chart now after it made that move. Okay? We were looking at XRP like this for weeks. For weeks, we were looking at XRP like this. We were saying, okay, it broke this downtrend. Hey, let's get in here, about 500-ish or so. Actually, I think we got in here. I remember getting stopped out on this once and then re-entering. We got in about here, about 535, and then the price came back down, stopped out. And I remember entering here a little bit lower, about 500 after I saw this spring. So we were looking at this like this for a long time, and expecting to get some sort of a wave set out of this. But were we expecting that fifth leg to get so grand and have its own waves within itself? No, it just takes off. So when we were looking at this, we were expecting this to be, like a 1, 2, 3, 4, get a nice 5 out of it, and then maybe get a retracement of the whole move. But that 5 just turned into its own monster, meaning that it's got 5 legs of its own. It's got 5 legs of its own, and it's actually getting ready to do the 5th one. So, I mean, here, this whole impulsive move now went 1, 2, 3, 4, and now it's getting ready to gear up and do another push up. Because the bigger picture for Ripple is the same as the bigger picture for a lot of these coins. Stochastic RSI on the monthly has a lot of room to grow. So where do you think Ripple's going to try to shoot to first? It's going to try to shoot here to this 1.272, just like Ethereum did, just like XEM looked like it's gearing up to. So don't be surprised if you see Ripple over 10,000 in this month, honestly. All right, maybe even this week. I mean, the way that things are going, my first targets are being exceeded, and I have to start giving you guys like my second and third targets because it's just getting blown right through. They're just getting blown right. And that's why, I saw when I was at the beach yesterday, I looked at the price and I said, whoa, what's going on here? And I was like, wow, this is really hitting the levels that I was going to start talking about targets later on the week. And that's why I said I think Stellar is going to blow right through our 400 target, and it did. I think it went to like almost 450. Now, is Stellar done? No, Stellar's not done. Stellar is just, retracing a little bit on some smaller time frames to get up enough strength to fulfill its destiny. Same thing. Monthly stochastic RSI strong, growing. We just had a nice impulsive move. Where's our first? Well, I mean, we want to start getting into extensions, and this it kind of gets ridiculous. But hey, that's where we're heading, guys. Actually, almost have to go down to here. But hey, up here, 10 times in price from where we're at right now. By the next couple months, it's not unlikely at all. Okay, it's not really unlikely at all. So, and we saw this. You guys have been with me for a while. We saw these moves coming when they broke their market cycle. We talked about Ripple at 500. We talked about Stellar at 100 or 120 or something like that. So we understood that these market cycles were breaking and new things were coming, but they're coming faster. And they're coming faster because it's a limited supply. I mean, it's the only thing that makes sense. The more money that comes in, the rapidness of it coming, the faster it comes, the faster these prices are going to go up and hit these extension points. So, just keep that in mind. Like when something breaks its market cycle, it's looking to fulfill its destiny to expand in price to a new high. And that new high is most likely going to be the first target of that new high, will most likely be the extension in price from the first bubble. So here, when we look at Stellar, that's why I say you guys could have sold yesterday at 400 for sure, but I just wanted to let you know it's going to blow right through that target. And now 400 to me is not even a target. Like 400 got passed yesterday, and now you can see even here, like we're starting to hold, and we're going to gear up for another move, another move. So how we recognize these moves coming is really what's the most important. And we have to understand that it seems like when we get that fifth leg, that fifth leg is turning into a monster all in itself. Because I've always found in cryptocurrency that fifth leg is that fear of missing out leg, where people, just kind of like chase it. Let's see, let's go back to XEM here real quick. So that's what I really feel might be what's going to happen here with XEM, because we've already done our 1, 2, 3, 4, and now we're gearing up for that fifth leg. And for us to get all the way up here to that extension, that Fibonacci extension, will most likely be a larger impulse in itself. Okay, like this fifth leg now, most likely over the next week or so. Let's check our weekly strength. Oh, that's right, it's pinned. So the weekly strength is pinned. It has the power to do it. The 3 days just crossing over, telling us that it's gearing up to do it. Okay, and that monthly stochastic RSI is just starting to grow. So we know where this thing is heading, and it's most likely going to try to beat its all-time high here and take out this 1.272. So I would expect now this 1, 2, 3, 4, this fifth leg to become a leg all on itself. Okay, to become an impulsive 1, 2, 3, 4, 5 all on itself. That's kind of like what we saw. Well, what we saw with Decred, and it's kind of actually now I think about it, what we kind of saw a little bit here with Strat. Okay, with Stratus. And again, this thing had a different high on Bittrex, so that kind of messed up my targets a little bit because I didn't realize it had a much larger high on Bittrex when I was given the targets for this thing. I don't even trade on Bittrex anymore, guys. I've really kind of seen with cryptocurrency trading, it's like you're either like a trading view kind of guy or a CoinG kind of guy, and if you're using CoinG charts, you're probably not trading stocks or foreign exchange. So, which I am sometimes still. So that's why I only use TradingView. I don't even, if I'm going to subscribe and pay for one, I'd rather use the one I can do with foreign exchange and stocks and gold and all that stuff too, rather than just coins on small market cap exchanges, honestly. So, but look here, this one here went right through the 1.272. This is what will usually happen. If it blows right through the 1.272, it'll come back to it and have to clarify it as support. So right here, this one went right through the 1.272, and then it came back down, and that price point served as support right here, served as support. And now, you know, this thing had to, you know, we looked at it in here, and, you know, it's creating its whole new leg. Like, this will probably get a whole new 1, 2, 3, 4, 5 leg up on itself to probably reach to about here. It's almost there. Oh, I'm sorry, one more. Right here. Right here. How the price respects these Fibonacci numbers is amazing, honestly, guys. I mean, it's, you know, trading's not really that hard. You know, it's a lot of technical and understanding the way that, you know, all these puzzle pieces fit together. But to me, it's a lot easier when you start to realize that this is what you're looking for. You're looking for this repetition, this fractal to repeat itself. And the reason it's repeating itself is because it's an emotional game. It's an emotional game. It's the same emotions of whether you're looking at a 5-minute or a 15-minute or a 4-hour or a 3-day or a month. You know, it's the same fractal that repeats itself on different time levels. So it has to make sense that this fractal is the emotional fractal, which is measured the same way that everything else in nature gets measured with the Fibonacci tool. So using the Fibonacci with the stochastic RSI with the Elliott wave theory in mind really starts to kind of map out the market for you as to where your potential trades could be. You know, where your levels of interest could be and what you might want to look for. Well, getting here late. What you might want to look for. So that's how we would use the Fibonacci tool for our retracements and our extensions, and even on smaller time frames. And we're going to see that Elliott wave. Sorry, not that one. Let's look at XRP, for instance, guys. Now, when XRP happened first time, the first move, we were getting Elliott waves out of the 5-minute here, okay? Right here. Okay. Now here, you know, we're watching here where it broke out, okay? And this entire move that happened in this 5-minute time frame, you could play with the Elliott wave strategy, okay? You know, we got like basically like a 1 here, a 1 and a flat 2, a 3, a 4, and then that 5th wave that just went further. Like I was expecting it to stop. Actually, right here is where I was expecting it to stop, because I was expecting a 1, 2, 3, 4, 5, but this entire leg right here wound up being a 3rd leg. Okay, and then a small dip down and then a 5th. So when you're mapping out the Elliott waves, be mindful that sometimes this 3rd leg that we get, since it's an expansion leg, has a zigzag in the middle. Okay, and that's basically what we just got out of that. Okay, like that 3rd leg and the 5th one in here, I bet you we could even, you know, if we look at a minute chart, maybe even in here, we could see, you know, some impulses and retraces. It looks like it just kind of shot straight up actually on that one. But what we find a lot is that expansion leg. That's why they kind of show it here. Like, well, this is kind of like the sub-minute, but this 3rd leg up in the red, okay, it has several moves in it that make it, okay? Well, it's kind of like what we've seen here, like this 3rd impulse in the middle. It usually will have, since it's an expansion leg, it'll usually have like a zigzag of its own in the middle, like this. And sometimes that can mess up your wave count. Like that's why I thought, okay, right here, we're, you know, that was our target. And then I, you know, that was my target based on previous price points. But when it hit, and I was like, you know, cool, it hit, and let me look for a retracement of the whole move, and I went to the beach. You know, did I realize that that was a just an extension of the third leg? No, not until it basically defied the retracement here and it went further. So, Elliott Waves, you got to kind of map them out as you go and definitely adjust your analysis as they form. Because we don't know when this thing starts, we don't know, we have an idea of what it's going to look like when it's done. But when we're getting in here on this, this point here or this point here, unless we really recognize the market cycle that we're in, we don't know, how far it's going to continue, until it finally paints itself, like with XMR, this is basically a nice map out of what XMR did. Now, we didn't realize that all those little waves that we were playing in XMR were leading into a bigger picture until they basically painted that bigger picture. And I still think XMR is going to go up, but it's just like the same thing as Ethereum and all these other ones. Like they got to like drag their feet until they just, show enough resiliency that they start to go up again. Now, against the dollar, this one's looking a lot stronger than against Bitcoin. But same way so. When we look at this on like hourly. And this is how you would break it down here, basically here. Like this thing, it created our entire wave structure. But now this correction leg right here is just dragging on, until finally, once this thing breaks this line, then it's free to go. I feel like it should be breaking pretty soon, especially how it's holding its dollar value. When we look here, it actually did slowly grind its way out of here, and it's starting to, come out of here. And this one's actually holding a trend against the dollar a lot better. The fact that these top market cap alts are holding their trend against the dollar is kind of a really good clue that they're kind of declaring their independence from the Bitcoin price. And so what we might see is, this thing holding its value against the dollar strong here, where if it continues out here and it respects this trend that it's on and, gets above this cloud, even on like a higher time frame, I think on the 6 hour, we're basically right on the cloud. Yeah. That if this thing gets above the cloud here and starts to push out, then it's, the price is going to follow in Bitcoin as well. So we got like two markets here that have to balance themselves out, like against the dollar and against Ethereum. And when you look at the charts, they're starting to look a lot different now because these things are holding their value against the dollar more than they're holding their value against Bitcoin. And so meaning like if you look at Ethereum against Bitcoin here, it fell a lot lower. And Ethereum against the dollar, it fell a lot shallower. Okay, actually bounced the cloud here. So as these things, hold their dollar value, it's kind of painting a little bit of an interesting picture because I really feel like they're going to respect the trend and continue on. But we're having a lot of, puddle jumping, like people that are holding one coin are just going to dump it to go chase the other coin and stuff like that. So that's what we see a lot of in cryptocurrency as well. So just to finish up here, I just want to show you guys the importance of using these Fibonacci numbers. Okay, like they are going to lead you to getting, the trades that you want to get and getting the entries and the exits that you want to get. Go back to XEM here. All right. Well, I got to finish up here because I got to get going. But yeah, whenever we see that impulsive move happen and we see that it's going to start a wave count, like I said, guys, always don't chase it. Get in on the retracement of it and look for that entry. Look for that entry. Off of there, it was the 61. Off of here, it was the 50. Okay, and so as our waves and our Elliott wave count, impulse and retrace, we're looking to get in on those retracement points with a corresponding Fibonacci price. Okay, and like we just mentioned, this fifth leg now, with all this volume and momentum coming, it seems like that fifth leg is manifesting itself into a whole nother Elliott wave, which makes sense because these are just waves within waves, you know. So, you know, but we're just seeing, you know, we have a 1, 2, 3, and a 4, and we get that fifth. Well, you can see there's a wave within a wave that makes that fifth leg, but we're just seeing it get very amplified in a sense. And I think that really is happening more so in cryptocurrency because of the limited supply. You know, when the price gets pumping and there gets a lot of volume and momentum around, it really just starts to go because there's not that many coins in the way. So that fifth leg we're seeing manifest itself out. Like, I would not be surprised from this move if this fifth leg starts to try to extend all the way up to this Fibonacci extension price that we're looking for, all the way up here. Oh, didn't let me drag the whole thing. But that's what I'm looking for it to go all the way up to there and to somehow most likely create its own impulsive, you know, cycle within that leg itself. And then after that entire move is done, then we'll also put a Fibonacci ratio on the entire move and look for re-entry from the entire move. It's the same repetitive thing over and over. So that's it for today, guys. I have to get going. Let me just look what you were asking me there, EJ. Don't know why, but sometimes my sound doesn't work on the live session. I hope this is recording soon. Yeah, I'm not sure. I'll shoot you a recording, though. Yeah, and also, sorry about this first couple recordings, guys. I had no idea that the Join Me program that I'm using here to share my screen, that it was making such horrible recordings. So, you know, I'm recording this the same way I do my YouTube videos now. So we'll be getting a lot better recordings on these on the future from here on out. But I'll catch you guys on Wednesday, and yeah, enjoy, keep stacking the Bitcoin, and enjoy these profits while we have this time to gather them. All right, guys, take care.